Warning, you're about to hear important information on one of the largest and legal multi-million-dollar tax deductions in the U.S. commercial building industry. Hi, this is Anthony Del Medico with SVG, and I'd like to share some important information with you regarding the Section 179 tax deduction for commercial building owners. Commercial building owners can now deduct up to $1.16 million in qualifying capital improvement projects for things like commercial re-roofs, HVAC, windows, even coatings and roof repairs. That's right, these can now be deducted in the first year they were installed or put into service versus depreciating over the old IRS timetable of 39 years. The reason you should pay close attention to this here now in 2023 is because this Section 179 tax change is set to expire in 2025 and could change as early as next year in 2024. Because of this expiration, building owners like you should consider front-loading improvements now during 2023 and investing in your property assets for things like commercial re-roofs and or other related capital improvements to take advantage of the Section 179 tax deduction. By the way, if you're a commercial roofer or a building contractor, then it's important that you know about the new Section 179 tax deduction. Why? Because you can alert your prospects and your clients to speak to their financial advisors or tax preparers about treating your re-roof project as a major tax deduction, now up to $1.16 million in 2023. Do you already know about Section 179 tax deduction? Maybe you do, but here's some things you might not know. You can now deduct the entire cost of the capital improvement project in year one versus depreciated over 39 years. Prior to 2018, tax codes required large capital outputs like commercial roofs to be depreciated per IRS timetables, typically over 39 years. Given that commercial roofs typically last only 25 years, that 39-year timetable has historically hurt the commercial building owner and his ability to fully deduct the roof asset. That all changed in 2017 when the Congress passed the Tax Cuts and Jobs Act. That's right, Section 179 of this code lets commercial building owners deduct capital improvements in the year they put it into service, meaning installed or completed, versus depreciating over 39 years. You can write off the cost of your old roof when replacing it with the new roof. That's right, you can get an additional tax deduction benefit when replacing your existing roof by writing off your old roof. That is, the cost of your old roof, less accumulated depreciation, can be taken off your books as a loss. So in addition to electing to take the deduction for the new roof, as you see behind me, you can also lower your taxes as a result of any loss from writing off your old roof. Now pay close attention to this, guys. You can take the Section 179 deduction even if you didn't pay for the roof that year. Section 179 allows you to deduct the cost of that new roof as soon as it's put into service. That means when the work on your new roof is done, you can then take full deduction that year. Here's the kicker. The IRS doesn't care if you actually paid for the roof. Perhaps your insurance company paid for it from a recent storm, or maybe you financed it from the bank, or maybe you have a deferred payment program with your roofer. This means you can get the Section 179 tax benefit without incurring any cash disbursements, which can then be used to wipe out up to $1 million in taxable income in other parts of your business. This is precisely what makes Section 179 one of the largest tax deductions in the history of the U.S. commercial building industry. By the way, if you're a commercial building contractor or commercial roofer watching this right now, then it's just as important that you know about the Section 179 deduction. Why? Because I'm betting your commercial clients don't know what they need to know about this deduction, and explain it to them will help understand how the price you're charging will be much less when they ultimately pay once the tax saving has been considered. So let's do a quick review on how this tax deduction can be best utilized in a couple different customer situations. Number one, commercial roofs and insurance claims. Commercial building owners across the U.S. have been affected by record hailstorms, tornadoes, windstorms, hurricanes, and other storm events that have resulted in billions in insurance claims for new commercial roofs and other structures on their property. For example, Hurricane Ian here in Southwest Florida affected thousands of commercial building owners who've already filed claims and are waiting on funding and waiting on bills, and now are making important decisions to repair or replace those roofing structures. If you're in an insurance claim situation as a commercial building owner or a contractor, and you're expecting your insurance claim to pay for your new commercial roofing project or even a repair, you can then wipe out up to $1.16 million in other taxable income for your business because you're not actually paying for the completed roofing project. Your insurance company is paying for it. but you can still take the deduction. So if your capital improvement project, like a commercial re-roof, is covered by an insurance claim, you can still wipe out up to $1.16 million in other taxable income for your business because you're not actually paying for the completed project. Your insurance company is, but you're still eligible to take the Section 179 deduction as soon as you put that roofing project or capital improvement project into service that year. Number 2, let's talk about commercial roofs and financing. If you're using financing, you can also enjoy using this deduction to wipe out other taxable income in your business, as this is very similar to the insurance claim model. Again, because you're allowed to take the full Section 179 deduction first year, even though you're not actually paying for it. You're financing through a bank. Number 3, maybe you're not financing your commercial roof. Maybe you don't have an insurance claim. Maybe you're paying out of pocket. That's cash. If you're paying out of pocket, you can simply drop your commercial bid or cash price, as you see behind me, into our Section 179 tax calculator. And that'll determine your tax deduction plus your cash savings. And here we used a 37% tax bracket. Guys, this Section 179 tax deduction is a reason to invest in your commercial property today, this year, in 2023, because it's set to expire next year. It's basically an enormous discount on the cost of a new commercial roof. Just check out that cash savings behind me. So click below and fill out the form to get your free Section 179 commercial roof proposal. If desired, we can also provide you with a complimentary roof and property inspection, as well as a commercial roof repair or replacement estimate. We'll then incorporate your estimate into a custom branded Section 179 digital proposal, which automates with the IRS tax calculator, showing you how to best maximize this deduction based on your situation. Guys, remember, the reason you need to act now this year in 2023 is because the Section 179 tax deduction is set to expire in 2025 and could change as early as 2024. Building owners need to act now to front load those improvements in 2023, get the tax benefit, and invest in their property assets for things like commercial roofs or other related capital improvements. So click below and fill out the form to get your Section 179 commercial roof proposal.